If you enjoyed this content, be sure to give our video a thumbs up. To keep getting bullion-related news and industry insights, be sure to subscribe to our channel.
The world is never going to be the same again.
I'm worried about the world.
The mass chaos and crises that there was in the world, it's going to be just like that now.
This is not an accident.
How long is it going to last? Longer than even for those of you that have some cash in the bank, way past your cash reserves.
Out of 100 people, 4 will get the message.
This thing isn't going to be over in a few weeks. This thing isn't going to be over in a few months.
For the first time in 22 years, the Fed has raised interest rates by 0.5 percentage point. It's part of the central bank's aggressive moves to rein in 40-year high inflation. Can the Fed engineer a soft landing, or are we headed for a recession or a depression? And what does this mean for gold and the status of the dollar? My next guest is going to weigh in on all of that. And he also says we could be on the brink of the bifurcation of the global monetary system. I am pleased to be joined by none other than Frank Giustra, world-renowned mining financier and global philanthropist. Frank also founded Lionsgate Entertainment and is now the president and CEO of the Fiore Group, a private equity firm managing a diverse portfolio of assets from natural resources to food to entertainment. And he is also the co-chair of the International Crisis Group. Frank, very good to have you with us.
Thanks, Michelle. Great to be on.
All right, and Frank, if I list your entire resume, I will not have any time for the interview, so I gave the abridged version there.
All right, thank you.
All right, so let's start off with the Fed, Frank. As expected, raising its benchmark interest rate by 0.5 percentage point, 50 basis points, also outlined a program in which it will eventually be reducing its $9 trillion of holdings by $95 billion a month. Now, Fed Chair Powell said today that combating very high inflation is job number one for the Fed. And this, of course, is the same Fed that assured us that inflation was transitory a few months ago. So, Frank, we already have signs of a slowdown with first quarter GDP at negative 1.4%. Do you think the Fed can rein in inflation and engineer that soft landing?
No.
In a word.
In a word, no. Listen, it's always interesting to watch the Fed, and I always and I've been a Fed watcher since the late 90s, and I've learned a long time ago to watch what the Fed does as opposed to what they say. And I don't think, well, actually, I think that this current war that's happening and a potential recession, slowdown in recession, is going to supersede any rate hikes. That's number one. Number two, I don't believe they're in a position, and I've been saying this for a number of years now, I don't think they're in a position to raise rates in any material way, for the very simple fact that the world is over indebted. I don't know if you know this, but in most developed countries, if you include corporate debt and household debt, government debt, it's over 250% of GDP. If you raise rates substantially, the whole system will implode. They know that, and I've called them out on it. I've written articles on this, and I believe there's going to be a lot of talk, but when it comes to raising rates to a material level and QT, I don't think they'll be able to pull it up. I think they will stop halfway.
All right. So what does that mean? Where do you see rates going up to then?
It's hard to say. And I'm just guessing here, but my guess is they'll take the rates somewhere between 1.5% and 2%, and then they'll back off like they did last time. They'll just, the market will throw a tantrum. Wall Street will toss its toys out of the crib. They're already starting. You can see it in the media already. They're starting to create this idea that rate hikes will bring on a recession. And I don't think the Fed has any tolerance for a recession. They haven't had a tolerance for a recession in over 20 years. And I just see them continuing to do the same thing.
So what does that mean for the economy then? If the Fed can't rein in inflation, At the moment, we've got two factors of stagflation. We've got increased inflation and slow down economic activity. The employment market is still not looking bad. But what does this mean for the economy if, as you say, the Fed cannot go beyond 2%?
I think they're just going to have to put up with inflation. I think that at the end of the day, they put themselves in a box a very long time ago. And I called this after the 2008 crisis. I said they will never be able to normalize. Normalizing meaning raising interest rates to normal levels, which in a normal economy is 5-6%, and unwind their balance sheet. I called BS on that back in 2009, and they tried before, and they tried a few years ago, and they weren't successful. So I think that we are in a period of stagflation, very much like the 1970s, which is going to be made worse by this current war with Russia and Ukraine. And I think that that's just the way it's going to be until there is some global monetary restructuring or a reset.
All right, before we touch on global monetary reset, you're saying we need to just get used to high inflation, paying more for everything from rent to gas to food. The Fed can't help us out here, and you still predict an economic slowdown.
Absolutely, because you've got the Fed can't address the supply side issues that cause inflation. They can only lower demand by raising rates, and I think a lot of the problems that we are facing today are supply side issues, and also a function of all the money that's been printed that is going to be almost impossible to unwind. And as soon as they lose control over anchoring inflation expectations, which is what the Fed, that's their main goal, is to anchor expectations about inflation, because it becomes a very self-fulfilling thing once it starts. I think they're going to lose control of that. And I think once the velocity of money kicks in, and you're seeing the job market's very tight and wages start to go up because you can't hire workers, inflation will set in and stay in for quite a long time. And I don't think they have an answer for this. I think their only answer is to continue to say what they're going to do and then not do it.
Yeah, and certainly the Fed's credibility very much on the line with this next move. It seems already that many are questioning, much like yourself, if the Fed does actually have the power to do anything about the situation that we're in. So Frank, paint me a picture. How bad does this get? Just how ugly can this get?
I think it can get a lot uglier. I hope not, but you've got a number of factors at play here. And like I said, the financial war between countries had already started, was already simmering before this war, this hot war in Ukraine started, and now it's full on. And I suspect that there has to be a reset of the global monetary system. It's out of whack. The US dollar is grossly overvalued relative to its trade deficits. And I think that has to be reset. And I don't know, I don't see this happening by way of consensus, like happened during the Bretton Woods Agreement and the 1985 Plaza Accord. In those situations, everybody sat down and came to an agreement about how to create the global monetary system, or how to reset it. I think this go around, you've got a very, very competitive and very strained world in terms of relations. And I think that it's going to be forced upon us by some action that, could be China, could be Russia, could be China and Russia together. We'll have to see.
All right. So as you're saying, obviously, we've had this unprecedented fiscal and monetary stimulus, which has perhaps served to devalue the dollar in the long term. Certainly in the short term, we're seeing the purchasing power of the dollar decline, but yet the dollar internationally is still at a 20-year high against other currencies. Cleanest shirt in the dirty laundry basket for now. But as you're saying, other factors at play here, the war in Ukraine, the weaponizing of the US dollar against Russia, which has perhaps deterred many countries from going the route of the dollar, considering their foreign reserves can just be confiscated, has been the case with Russia here. So these factors, Frank, you're saying are going to lead to a reset? Break that down for me. What does this reset look like? How does it begin?
I don't know, but I can speculate, and I'm speculating on the basis of what I'm seeing happening with respect to gold purchases around the world. I don't know, since 2010, a lot of the central banks around the world have been on a gold buying spree. They've been de-dollarizing, especially Russia, and loading up on their gold in terms of their foreign exchange reserves. And so I suspect that when the reset comes, it could come by way of some agreement between Russia and China. And China is an interesting example. You know, they're not very transparent when it comes to reporting their gold purchases. And so if you look back at, in 2009, they announced how much gold they've been buying since 2003. They hadn't said anything until 2009. Then they announced it. Then they report their annual purchases up until about 2015. Then they stop. They take a break. Then they start reporting. And every time they stop and report again, their gold reserves go up exponentially. Now, they stopped reporting in 2019 at about almost 2,000 tons of gold. But I'm very sure that China, which is the world's largest gold producer, does not allow the export of gold mined there, has a lot more gold than that. And I suspect that we're going to find out at some point. And it may, and again, I'm speculating here because who knows what it will look like, but let's suggest that perhaps it's, you know, they're created in this digital yuan. Maybe it's going to be gold backed for a portion. And remember, you don't need full gold backing to have a gold-backed currency. Anywhere between 20 and 40% of gold on your M0 money supply is enough to have a gold-backed currency. But let's assume for a moment that China wants to continue to trade with Russia and vice versa. They could create a gold-backed currency for trade purposes only. So it's a settlement currency as opposed to a reserve currency. And they could conduct their trade on a net basis. In other words, they would settle every quarter or every period. They would settle with gold, depending what the trade numbers are. And I think that that's potentially one thing that may upset the global monetary system, where the U.S. dollar will no longer be the sole reserve currency, which has had since the Bretton Woods Agreement, and then the world has to decide. And if you think about it from the point of view that almost 80% of the world's population did not condemn Russia after when it was called to a vote at the UN, countries like India and Brazil and South Africa and Mexico and others want to maintain good relationships with Russia. And so in a world where you have a bifurcated monetary system, you have a US dollar system for the West and some other system, maybe a gold-backed system for the rest of the countries, they could easily trade on many countries could easily trade on two systems. And so I think until there's some global consensus, which I don't think is possible today.
Okay. A lot to unpack there, but to your point, Frank, the countries that in fact bought the most gold since 2010, Russia number 1, China number 2. They have been buying gold, they have been hoarding gold, and as you quite correctly pointed out, China still hasn't declared the gold that it bought since 2019. It looks as though it stopped purchasing gold, but as has been the case in the past, perhaps it just hasn't declared that. So let's unpack this reset and this two-system payment, global payment system. One of the factors here that I'm hearing you touch on is the fact that the dollar has been increasingly weaponized following Russia's invasion of Ukraine. And we know that the Russians were looking at accepting at pegging the dollar to the ruble at some point. They've been trying to move in that direction. So play this out for us. How exactly does this happen? And I realize you're just speculating, but I want to see if you can just elaborate on what you're speculating can happen.
Yeah. So, and again, as you've mentioned, Russia is toying with the idea of a gold-backed ruble, and if you look at what happened when they announced after the sanctions were put in place, and they announced that they would buy gold 5,000 rubles per 1 gram, and that was when gold was $1,945 an ounce, and it was when the ruble was 80 to 1 to the dollar. Okay, then the sanctions fell into place. The ruble crashed. It went all the way to 135 to 1, I think. They put in, capital controls, excuse me, raised interest rates to 20%, and then watched as the commodity prices like oil went up. And if they are thinking about, on that basis, if they're thinking about a gold-backed ruble, the ruble is now about 67 to 1 or 66 to 1. At 62 to 1, that equals, based on what I just gave you, that's about $2,500 gold. And so I think that, again, I'm speculating. I don't know how they're going to do this, but I think one of the reasons that perhaps the West does not want a higher gold price right now is because of all this conversation. And I think they would like to torpedo that idea if they could. I'm not sure they're going to be able to.
Okay, you've touched on an interesting point there, which links back to something that you tweeted, that you think that the gold price is being manipulated. But that's a huge topic. Before I get there, I'm just curious. So you see a system where the dollar is still in play. You've got the yuan backed by gold to some degree, a digital yuan backed by gold, and perhaps even a digital ruble backed by gold. And you see those systems coexisting with the US dollar?
Yeah, because I think we live in a very divided world. We're in a multipolar world right now. Globalization is over. I think everybody's admitted that for the time being. And so I think you're going to have a world where you have different trading blocks, and you're going to have the friendlies and the unfriendlies, depending on which side you're on. And I think that there's no reason why the global South, countries like India and Brazil and others, can't trade in both, to maintain relations. So I think that's very possible. And by the way, it could be something else. It could be a ruble backed by gold and other commodities. There are different ways of doing that. I just watch what everybody's doing with purchasing gold and has been doing for the last few years, and I think that that's probably a good guess that gold will be a component of this. May not be all of it, but we'll have to see.
All right. In this scenario, if gold is somehow returned as backing fiat currencies in a considerable way, even if China is buying gold, the U.S. still holds the highest gold reserves in the world by far. According to the World Gold Council, in conjunction with the IMF, the U.S. is at least 4 times the amount of gold that China has at the moment.
Declared gold.
Okay, so you think that, but it's 4 times.
I am convinced that China, when they next report, whenever that may be, will be a lot higher than the 2,000 tons they reported back in 2019. I mean, think about it. They've been the world's largest gold producer since 2007, producing about 15% of the world's gold. And they don't allow export of that gold, mined gold. So do the math. They've mined about 7,000 tons since 2000. Where's all that gold going? Sure, some of it's going to private individuals, which they encourage, by the way. The Chinese government has encouraged individuals to buy gold. You've got the Shanghai exchange now. There's a real gold trading system within China, but I suspect that it's a lot higher. And it doesn't have to be more than the U.S. It just has to be enough so that they can use it to trade, to settle trading with select countries.
And why would select countries go that route?
To trade with Russia. Many countries, specifically India, the largest population in the world, wants to maintain its trading relationship with Russia, and obviously is doing lots of things behind the scenes to make sure that that they're able to do that. So I think that it's for that reason only. It's just to be able to trade outside of the U.S. dollar system while all these sanctions are in place.
So you're not necessarily predicting the death of the US dollar as a global reserve currency at the moment. You're just saying it's going to lose its position as the singular top global reserve currency.
It's already lost a lot of, over the years, it's lost as a percentage of foreign exchange reserves of central banks is down 60% now. And as a trading currency, it's also gone down percentage-wise. And I think it'll continue until, again, I don't believe the dollar, like every currency that was ever created, will exist forever. I think that the dollar's days are numbered just because they've printed all this money, and they're destroying the value of it. But that could take years for total destruction. And Japan's doing a much better job of destroying their currency than America, and so it's all going to be relative. The U.S. dollar is strong relative to what, the yen, the euro. So I think that the world could possibly live in a system where the dollar exists with a reduced value, and you have some other trading mechanism.
Okay. And that trading mechanism could be a gold-backed digital central bank digital currency, partially gold-backed.
Yeah.
Partially gold-backed, partially commodity-backed, central bank digital currency. And you're saying that China is bolstering to take that position. Frank?
China sees the writing on the wall. I mean, think about it. They've watched all, when the Ukraine war started, they saw what the West did. And they have to, I'm sure they're, looking at how do we prepare ourselves for a potential conflict with the West, specifically America, and what do we need to do to protect our monetary system? And I'm sure this is going to be part of the conversation, and they might already have a plan for all we know.
Right. We've had many people on this show, including the likes of Jim Rogers, who has said that the U.S. is making a huge mistake by weaponizing the dollar instead of keeping it as a neutral currency, which is what a global reserve currency should be. I want to focus now on the fact that you said because the West is perhaps seeing that this is the agenda, that it's keeping gold prices suppressed. Unpack that for us.
Well, listen, it's been no secret that since the U.S. abandoned gold in 1971, they've tried to suppress it to allow the U.S. dollar to maintain its supremacy, okay? And that supremacy is important in terms of your home interest rates, keeping them low. It's important to anchor inflation expectations. It's important for a whole bunch of reasons. And, if you look back, they were very overt about it, the West being Europe and the U.S., about selling gold to suppress its price during the 60s and the 70s. You had the London Gold Pool, which was very open about selling their gold. And then during the 70s, the U.S. sold, between 1974 and 1980, the U.S. sold 1,000 tons of gold, and they convinced the IMF to sell another 700 tons of gold. And then they got smarter. Then they realized, hey, we can't sell our physical gold. That's going to work against our interests. So they discovered derivatives, futures and swaps and leases, which are highly, highly levered and allows policymakers through their bullion dealer relationships to suppress the price of gold without losing their physical ownership of it. Just by, if you think about it, futures are levered 20-1, gold futures. So with a $10 million margin, you can sell $200 million worth of gold, and you can spook the market. And the way they do it is, and here's the thing, this is what I tweeted the other day. I started my life on a trading desk. I've been a trader all my life in terms of mentality, watching markets. And I've watched the gold price almost on an hourly basis since 20-something years ago. And what I've noticed is that lately, when there's a massive sell order, when there's the crushing of the gold price, it's quite vicious. And to me, it looks like it's done on purpose, and it's done to scare investors away from gold and to keep the gold price down. And they've done a very good job of it. And so they wait for days when the markets are thin, or they wait till the COMEX is about to close. And then also you get this massive selling of all these contracts, and it triggers stop losses. It does all sorts of things, scares everybody away. And then they cover it, and they don't need to sell their physical gold. And that's what I think is happening here.
All right, Frank, that's a very big statement. Who is the they in this scenario?
Well, I think that it's the Fed.
The Fed.
I think in working with the bullion banks, and I think that they don't necessarily have to communicate directly with the bullion banks. They can do it through the BIS and give the BIS instructions to sell futures, and that's then executed through the bullion banks. And then, occasionally, you see occasionally these bullion banks, they all get caught spoofing the market. They all get fined some amount of money, but they're making so much money it doesn't matter. I mean, that $1 billion fine for JP Morgan, I mean, that was the biggest, but that wasn't the first. They've been caught doing this forever, and they can do it because they can sell future contracts. They can also use what's the unallocated gold holdings in brokerage accounts. And I don't know if you know the difference between allocated gold and unallocated gold, but the idea is that perhaps there's between 20 to 1 and 100 to 1 ratio between what is unallocated. And unallocated gold means that if you're an investor and you purchase your gold through a broker, you don't have a claim on that gold. What you have is a claim on the bank as an unsecured creditor. And if there were ever a run on the bank, people looking for their gold, they would simply just close your account and pay you the money cash for the closing price. They don't have to, according to what you sign when you open those accounts, they don't have to pay you, they don't have to give you your gold. So that gold is unallocated, and it's used to suppress the market.
Frank, certainly have heard the point before that there is way too much paper gold out there that physical gold can't cover. But just want to get clarity here. You are saying that the Fed, the US Central Bank, is coordinating the suppression of the gold price?
Directing traffic.
Directing traffic.
Yeah. You're never going to find a smoking gun on this. Okay, so that's the problem. I think years from now, in hindsight, we will have seen what they were up to. But they're not going to leave you a smoking gun to find. There's only circumstantial evidence, and I just look at it from the trading perspective. I see what's happening in the trading, and it doesn't make any sense what's going on.
Look, a lot of people would agree that the trading patterns don't make sense, especially when we have a situation like we have right now with record high inflation, geopolitical and economic uncertainty. And gold, which is supposed to be a safe store of value and an inflation hedge, is not really performing as it should. But saying that the Fed, Jerome Powell, who is coordinating this
I don't know.
suppression?
I don't know. I know whether it's the Treasury or the Fed, but it's the policymakers that need to look. We're in a global financial war.
Right.
This is war.
Okay.
Because the sanctions were an act of war, if you look at it from the perspective of those that are being sanctioned. Okay, so there's a war taking place, and the U.S. is fighting that war in whatever way they can. And the last thing that the U.S. needs is a $3,000 gold price. Because that's just going to alert everybody that there's a problem.
And this has been a recent development, because many would say that the U.S. Fed is intentionally suppressing the price of gold. How long has this been going on for?
Like I said, this has been going on since the 70s. Since 1971, and I don't know if you've ever seen, there was the minutes of a meeting by Henry Kissinger with the Treasury, the Secretary of the Treasury back in 1974. Look up what was said in that meeting, and it's very obvious that what they were trying to engineer is to maintain US dollar supremacy, then it was against what they believed were larger gold holdings by the European banks.
Okay.
Because collectively, the Europeans own more than the US, so they had more power. So they had to figure out, and this was discussed, you can look it up, the minutes of this meeting. And so they've been managing. I was on Kitco 6 years ago in an interview, and I was asked the same question. And I said, that point I used the term, they manage the gold price. I think they're outright manipulating it now because I think we're in a global financial war.
So you're saying this current dynamic that we're in has exacerbated the problem and has amplified the manipulation by the Fed?
I believe that. I have no evidence.
Okay. So, Frank, it begs the question, if gold is manipulated, why invest in gold?
Because they can't keep this game up forever. And at some point, there never has there been a manipulation that's lasted forever. Eventually, everything comes out in the wash. And I think that given the dynamics between the US, China, Russia, and the rest of the world right now, I think that maybe we might see that eventuality sooner than I would have expected because of what's happening in Ukraine, but they can't suppress the gold price forever. And if what happens with China and Russia is what I predict may happen, then I think the gold price will find a new level.
So to recap, when China, as you're speculating, comes out with this gold-backed central bank digital currency that is going to force all of this manipulation out into the surface, and that's going to skyrocket the price of gold?
I'm not sure it's going to skyrocket it, but it will certainly take it to a level where it is equal to what they're pegging at whoever creates this new currency. And like I said, and again, I'm just speculating here, but if you have a 62 to 1 ruble ratio to dollar, and you use that 5,000 gram purchase number, then it indicates a $2,500 gold price. I don't know what it's going to be, but I just suspect it's going to have to be higher. And listen, if the U.S. is ever forced to have a partially backed dollar, gold-backed dollar, and they did it to the tune of 40% of M0 money supply, they would have to peg the price at around $15,000 an ounce. So I think there will be a time in the future where gold is going to be revalued either by force or by consensus. But otherwise, because I just think all confidence has been lost in fiat currencies everywhere.
And I know you're speculating here, Frank, but do you have a timeline for when this reevaluation of gold can happen?
No, I don't. I really don't. I've always said anybody that predicts timing is a fool, okay? Because there's so many things, timing and prices. I've been asked what I think the gold price is going. I've always said I've held my gold since 2001, and I always think, well, I'm just going to hold on to it. It's always going to go higher over time, and that's your preservation of wealth. That's not to get rich like the Bitcoin players. This is about preservation of wealth. So you keep a certain amount of your wealth in gold, and it's different numbers for different people, and that is what you keep to just hedge against everything.
Okay, well, you mentioned Bitcoin, and I get your point that the weaponizing of the dollar is a deterrent to other countries, bolstering their dollar reserves, that it's a threat to the long-term status of the dollar, that we're seeing dollar devaluation, dollar debasement with this unprecedented monetary and fiscal stimulus. I get that point. Many would say, you're right, you're absolutely right, but that the solution is Bitcoin, not gold, that Bitcoin becomes the replacement here, that there could be a Bitcoin standard. What are your thoughts there?
Well, as you may know, this is the 1-year anniversary of my debate with Michael Saylor on that very point. I was last April that we had that 2-hour debate. And okay, first of all, it's fair. I think to be fair, I think I said at the time, or I said afterwards, you got to give this 5 years because, the whole Bitcoin gold debate, you got to give it probably 5 years, and then we'll see who comes out on top. But if you want to keep score 1 year later, Bitcoin's down 40% and gold is up marginally at 5%. But the point I was trying to make on that debate, almost everything I said on that debate has held true. And now I'm going to get I'm probably inviting a whole bunch of Bitcoin maxis to send me hate mail right now, but I'm going to say what the facts are, okay? It's failed. Bitcoin failed as a payment transaction currency. That was its initial purpose, failed. As a safe
We're
haven,
going to have to revisit that one, but go on.
No, but it's I know where you're going to go with it, but as a safe haven, it's failed. As a store of value, it's failed. As an inflation hedge, that's a very flimsy argument. And it's a hedge against the stock market, it's failed miserably. And you don't have to have a PhD in math to see that Bitcoin is perfectly correlated with the NASDAQ growth stocks. And that's what I said at the time. This is a speculation play, not a safe haven or a store of value. And it perfectly correlates with speculation assets. The NASDAQ, you watch what's happening in NASDAQ in the last number of months, Bitcoin goes down with it because it is not a store of value. I know it aspires to be, but it isn't. And so I think it's this casino mentality that's been driving all these markets in the U.S. the last couple of years since COVID, and I think that's what's caused the bubble in Bitcoin, caused the bubble in the NASDAQ stocks, and now the air is coming out of all those things, and Bitcoin's going down with it. It's way too volatile to be a store of value. I don't see where it succeeds, and every time they state it has a purpose, it fails. So to me, it's an asset in desperate search for a purpose, and it doesn't have that yet.
I'm going to bring on one of the Bitcoin maximalists, and perhaps you want to revisit the debate at large. But in the interim, I want to just dissect some of the points you made there and push back. You quite rightly said that we have been seeing a correlation between Bitcoin's performance and tech stocks, that there has been a coupling there. But you also quite rightly said that you're only looking at it in a 1 year framework. And if you look I can't look 5 years forward, but I can look 5 years backwards. Mm-hmm. And 5 years backwards, the Bitcoin performance versus gold is up over 2,615%. 5 years backwards, it's outperformed gold by 2,615%. So you can't really establish the track record as a store of value based on this 1 year alone.
But that's not, again, I think you're comparing apples to oranges here. The reason Bitcoin went up the way it did was not because it was perceived as a store of value. It was a momentum play, in my opinion, that attracted a lot of speculators. People buy Bitcoin to make money. They use fiat to buy it, and then they get their fiat back when they sell it. Everybody wants to get rich. And that's been the sole, in my opinion, what I see as the driver of Bitcoin. Now, and I'm going to take you up on one point here. And this is the part that really bothered me about the wholesaler debate. And the reason one of the many reasons I wanted to debate them. Bitcoin maxis use a short-term phenomenon to validate a long-term thesis. And one of the things that Michael Saylor was doing quite effectively, until I called him out on it, was that he would say, listen, Bitcoin goes up 200% every year. And sure, if you use 2 or 3 years of data, yeah, he was right. But then he predicted that would continue 200% a year, and pretty soon you'd have $500,000 Bitcoin and $1 million Bitcoin. And that's where I call BS, because the world just doesn't work that way. And what upset me was that he was convincing people to sell all their other assets, sell everything, borrow money, mortgage your house, mortgage your car, and be all into Bitcoin. And that was about the dumbest thing that anybody could say to investors. And I think a lot of people that maybe were levered, highly levered, and their Bitcoin purchases are probably hurting right now. Maybe a lot of them got wiped out. Bitcoin's gone from 65,000 down to 39. And it could go down lower. Who knows? I think it will go down lower. I think it'll go down quite a bit lower, because I think the NASDAQ's going to go down quite a bit lower still. This market road is not over. We are in a bear market. And so I just find all those arguments as they don't make any sense to me.
Well, look, Frank, I'm certainly not going to debate the merits of diversification of one's portfolio with you. I personally 100% agree that one should be diversified. As for your challenges against Michael Saylor, Kitco is more than happy to host round 2 of that debate.
I'm not sure he would do it, by the way, but I've been asked to do another round, and I said no, because I said my piece. Give it 5 years, Michelle.
Okay.
Give it 5 years, and then invite me back on, because we'll see. Okay,
well, as I said, can't project 5 years in the future, but one of the points that you mentioned now and that you mentioned in the debate regarding Bitcoin was that you didn't see it as a good form of payment. But since then, Frank, tremendous developments in the second layer with the Lightning Network. The Lightning Network is now capable of running millions to billions of transactions per second. We've had big developments through Strike, which is partnering up with Shopify's global network of merchants. It's going to allow for payments across the Bitcoin Lightning Network. That's huge. Strike has also partnered up with NCR. That's the world's largest point of sale supplier. It's going to be far more feasible and viable as a form of payment. The transaction speed has already changed drastically. So do you acknowledge some progress on that front, that Bitcoin as a form of payment has moved in the right direction?
It perhaps has moved in the right direction, but it's not there. It hasn't been proven to me yet that it will be adopted. Okay, and so I'm just saying, I'm just stating facts as they are today.
Does El Salvador adopting it as legal tender? Central African Republic? I mean,
Michelle, listen. El Salvador, their Bitcoin experiment has been a real disaster. It hasn't. People have not adopted Bitcoin as was hoped. They've got an $800 million debt coming due this year, and that's why they want to do this. This Bitcoin volcano bond, which I don't think is going to work. And I just don't see El Salvador. You can't use that as a success story, because it isn't. It hasn't been, and people don't want it. They've been protesting against it. And the Central African Republic, are you kidding me? It's a country of less than 5 million people, where only 10% of the people have access to the internet. 70% live in poverty, and this is going to be, Bitcoin is going to be a solution with only 10% internet connection. I mean, none of this makes any sense.
All right. Well, as I say, the Bitcoin maximalists would argue that this is the beginning of a trend, that other countries are going to be using Bitcoin as a global reserve asset, if based on nothing alone other than game theory and fear of missing out. But I don't want to debate those points with you. Again, the invitation is open. If not with Michael Saylor, I'm sure we have other people that would gladly take you up on that.
Yeah, I'm sure.
But Frank, you mentioned diversification of your portfolio. Do you allocate any of your personal portfolio, if not to Bitcoin, then anything to do in the DeFi space, in the decentralized finance space?
No.
No,
I don't.
We've got the likes of Kevin O'Leary saying...
I honestly think, listen, and that's not to say I wouldn't in the future, okay? I'm just saying, have I today? No. I believe we have just popped an enormous bubble, and and you're seeing the beginnings of it. This is far from over yet, okay? And that bubble was everything from stocks to bonds to cryptocurrencies, NFTs. Everything has been in bubble territory. This is the most insane bubble environment in history that you just witnessed. And when it deflates, and it's already started, but it's far from over, everything's going to come back down to earth. And there will be a moment in time where you have to start looking at things and going, well, where does value exist? And perhaps there will, depending how things evolve and, how some of these cryptocurrencies evolve, maybe there will be something to look at. But today, I wouldn't touch it with a 10-foot pole.
Okay, because we do have the likes of Kevin O'Leary, a regular here on Kitco News, saying that he sees DeFi as the 12th sector of the S&P 500, that decentralized finance as a sector is growing. You have no interest in allocating to that sector at this point.
Kevin is a very good friend of mine, very good friend, and we've disagreed on everything, including this. So Kevin has said a lot of things. I think for Kevin, he's invested in it. It's very long, and there's probably some wishful thinking in there. I wish him well with it. Hey, listen, I could be completely wrong, but you asked me my opinion, and just by knowing history, especially financial and economic history, no, I think it's too early to touch any of this stuff. I think there's going to be a huge implosion of a lot of things, and then ultimately something will come out of this that will be useful. But I don't know whether that's Bitcoin or some other crypto or anything at all is still up in the air as far as I'm concerned.
Okay, well, we have you here for your opinion. So that's what we like to hear from you, Frank. What we did see regarding Bitcoin with the war in Ukraine is that it did showcase Bitcoin to be a transportable store of value. I know you're questioning the store of value aspect, but a transportable asset. But I just want to use that point to bring it back to the conflict, to Russia's invasion of Ukraine, because amongst your many accomplishments and positions and accolades, you're also the co-chair of the International Crisis Group, which is a non-profit NGO committed to preventing and resolving conflict. We're now over 70 days into this invasion. We have the EU saying it plans to ban all imports of Russian oil, part of a 6th sanction package. We have the conflict escalating in terms of hostilities. How do you see this playing out?
Sadly, a very long, drawn-out war. And it's clear to me that now the West is looking at this as an opportunity to weaken Russia. So they're prepared for a long, drawn-out conflict, which is tragic for the people of Ukraine. I don't think we're anywhere near any type of ceasefire or even proper peace talks. I think both sides are entrenched in their views, and Putin has now recalibrated what he's going to look to as a win, being the east, the Donbass region, and the south on the Black Sea. If he can maintain that land grab, he can possibly go home and declare victory. But that part is far from over. And I think that the West, given how they've come together on this, NATO and the US and the European countries of NATO, have come together in a way that I don't think Putin expected, and continue to supply sophisticated weaponry to Ukraine and training and all these things. I just have a feeling this thing's just going to drag out a very long time, sadly.
Okay. Well, regarding the way the U.S., the Biden administration has handled this, Frank, there's been a lot of criticism that it's really mishandled the situation, that the Biden administration signaled tremendous weakness through Afghanistan and the withdrawal debacle there, and that Biden made a huge error by declaring upfront that the U.S. would not be sending troops if there was an invasion, and that eliminated that aspect as a deterrent. Now, I'm not saying that the U.S. should have sent troops, but many are saying that the fact that Biden declared that up front was problematic, that he should at the very least bluffed, left it unclear as to how the U.S. would react. And perhaps that would have deterred Putin. Many would say that Trump, had he been in power, this wouldn't have happened, if nothing, for no other reason that nobody would know how Trump would react. He had the whole wild card factor there. So how do you think the Biden administration has handled this conflict?
I think, I think that in many ways they've handled it really well. I do agree with you that they should have never taken that one thing off the table, being that they wouldn't engage directly by sending troops into Ukraine. I think that might have given Putin some encouragement to attack. So I think that was probably a mistake. But otherwise, you know, everything else they've done in coordinating with NATO, getting all of the NATO countries on side, and agree to the sanctions that hurt Europe, you know, more than anybody in terms of energy supplies. I think that has been handled very well if you look at it from their perspective.
Well, what about the idea of diplomacy, that there was an opportunity for diplomacy very early on in the game, and that the end game may actually be the U.S. and its allies giving Russia's the exact same concessions that Russia asked for up front, and that is that Ukraine declares neutrality and that Russia gets to keep the Donbas region. And many would say, had the US been more open to negotiation up front, if this is where we land up anyway, that thousands, tens of thousands of lives have been lost for nothing.
Yeah, no, that's an interesting thought. But, you know, in geopolitics, you're always guessing in terms of what the other side might want to do. I think there was a belief that Putin's ambitions were beyond Ukraine, and I think that the position that was taken was you can't give him an inch because he will take a mile. And so, and you can't argue that. I mean, may or may not be true, but it certainly wasn't without precedent with respect to how Russia has looked at its neighboring countries. So, and the statements that they've made. So, listen, I hate second guessing because, our job, the crisis group job is to end wars or prevent them from happening. And now we're in it. I don't think if Zelensky declared neutrality with NATO, that would change Putin's mind at this stage. I think he's clearly got his eyes on a land grab now, which includes not just the east, not just Donbass, but also the south, right up to Odessa. So, and I think that's what, that's going to be the negotiation down the road. It's not going to be just NATO neutrality.
I know we've covered at length how you see this impacting the global monetary system with China and Russia, but do you think this emboldens China to perhaps be more aggressive with its ambitions regarding Taiwan?
No, I think if anything, it's going to make them take pause on Taiwan. Listen, Taiwan is across, I don't know how many miles that strait is of water. It's not crossing a border on flat land into Ukraine. It's a much more complex, if they were ever to invade Taiwan, it'd be a much more complex invasion, much riskier. And I think now they've seen that the West has united in terms of sanctions against Russia. Sanctions against China would be devastating to their economy. And I think they're going to, if anything, they're going to take pause and go, okay, we have to recalibrate our thinking about, our ambitions with respect to Taiwan, and maybe we have to speed up our, what I mentioned earlier, the whole reset of a monetary system. But no, I think it's quite the opposite.
So you don't see the reset of the monetary system that you discussed with China having some digital gold-backed currency. You don't see that as a prelude to taking action against Taiwan as preparation for that?
I think, it's not just Taiwan. I mean, relationships between the U.S. and China are very frosty. There's almost, there's almost trade wars taking place here. You've got the Quad, the creation of the Quad with Australia, Japan, Canada, and the U.S., coming together to counter China's rise. So there are lots of things that are in play there. So I don't think it's just Taiwan. Okay,
but you're seeing overall that the way that the U.S. and its allies has responded in coordination with regards to sanctions, you think this deters China?
Absolutely. I mean, China cannot afford yet to lose trading privileges with both the U.S. and the EU. That would be devastating. That's the bulk of their trade.
Okay.
They still need that trade while they create their own domestic economy, which is now, they've got problems like everybody else. You got real estate problems, they got, all sorts of COVID problems, and they need that growth. They need that trade. I'm sure that, they're rethinking everything now post-Ukraine invasion.
Well, a lot of investors are also rethinking a lot of things post-Ukraine invasion. So I want to wrap this up with your thoughts on what we can offer to our viewers in terms of investment advice. You're telling me that the gold price is manipulated, at least in the short term. You're expecting a giant crash in all other assets. So as an investor, what do I do here?
Well, I think, and it's a very difficult question, and I've written quite a bit about this. I think, and this is what I said on my Saylor debate when he was saying all in on Bitcoin. I said, the smartest thing you can do in this environment, this is a year ago, I said, diversification. You have to be diversified. And that includes some cash, gold, other hard assets, okay? And diversification in geography, okay? Out of the US market to other emerging markets, perhaps. This is what I've done personally. I've looked at, I haven't touched, the only stocks that I own are gold stocks, and some of the large materials producers around the world that are generating fantastic dividends. Canadian preferreds are great for yield, but it's a hard asset environment because I believe inflation is here to stay for a while. So I think you have to be skewed towards hard assets. But it's anybody's guess because anything can happen. And if one thing happens, you want to have a lot of cash. If something else happens, you want to have a lot of gold. But it's a tough one, and so I'm a fan of Ray Dalio, and Ray Dalio talks about this extensively. Is about you have to be diversified, and you have to be diversified in asset classes and geographically, and that's the only way you can save yourself. And I don't know if you saw what Jeff Gundlach said yesterday. He's going right now. Preservation of capital is everything. Forget about making money, and that's why I'm holding my gold. Sure, gold hasn't performed, but it's not going down like all the other asset classes at the moment. So, and eventually, I think it will go up when things happen. But you have to be diversified, and that's what I tell her. Be very careful. Now is not the time to speculate.
Preservation of capital. Is cash trash in this environment, or is cash king in this environment? In that it will give you the opportunity to buy,
as I said,
when things drop.
You need some cash because it may, on one hand, be trash, and in another situation, if this market's completely crashed, like this market is only down 20-something%. The Nasdaq, what is it, down 23% or something? If you look back at the .com era, that crash, and then you look back at other really severe, 1969, these markets, 1930s, markets can go down 80-90%. Before they recover. And then they can take a long time to recover. So cash is important, okay? My guess is that the Fed will fight market crashes, recessions, everything they'll come back to printing money. They'll come back to lowering rates back to zero. It will happen. There's no doubt in my mind. They have no tolerance for this stuff. And then I think so you want to own some cash, but you also want to own gold because I think that ultimately gold is going to play a role in the global monetary system. So, and some select stocks. So, what is
the best way to invest in gold then? Is that buying physical gold?
It depends on your motivation and your objectives. So, and this is the way I do it personally. For preservation of wealth, physical. Absolutely, you have to own physical gold or something that's very close to it. And there's a couple of ETFs that offer far more security in terms of your ownership of gold than the GLDs do. So if you want preservation of wealth, put it all in physical. If you want to trade the gold price because you like buying it and selling it, play the ETFs. If you want to make money, buy the gold mining stocks. And if you want to get rich, you have to take risk, with everything else, and buy the junior miners that are developing assets, and that's where you're going to get your biggest bump. But that's comes with some risk, and so you have to understand the risk of investing in those. So I have it across all of those categories. I have, my trading, my ownership, my getting wealthy, and my getting really wealthy.
In terms of your gold mining stock picks or juniors, do you have any that you want to point out for us?
Well, the only one, listen, I've been in the business of building gold mining companies for 20 years now. And I'm on my fourth one, where I'm backing a management team, as I've done before. The first one was Wheaton River, which became Gold Corp, and we founded that in 2001, and it went to at its high, it had a $50 billion market cap. It was eventually taken out by Newmont about 3 or 4 years ago. Then we created Endeavour Mining, which was all in West Africa. We exited that a few years back, and I think it's got about an $9 billion market cap. I started Leia Gold in 2016 with Neil Woodyer, and we eventually merged that with Equinox. Equinox is give or take $3 billion. I'm still a big shareholder of Equinox. And And then we started Eris a couple of years ago, and we're going to build that into a major gold producer. And that's got a market cap of around $230 million. And we're aggressively going to build that out. And our model is very simple. It's buy and build. So we do a lot through M&A. And so we do both acquisitions and developments, and we buy mines. And it's always looking for opportunities that no one else recognizes, where we can create value either on the balance sheet or on the operations themselves. And so we've got Eris Gold right now, and I'm all in. I put in a lot of money into that, and we're going to, these things take 3 to 5 years to build. We're 2 years into it, and the objective is always to get to about 1 million ounces a year, and then it becomes institutional quality. It's in the indexes. It gets re-ratings, and that's always the objective. Just start from nothing and build it up to about 1 million ounces a year.
Okay, well, we'll check back in certainly in 5 years' time. Hopefully much, much, much sooner, but certainly in 5 years' time, we'll see where gold is, where gold mining stocks are, and of course where Bitcoin is. But going from gold to black gold, which is oil, to green gold, if I'm going to say that, and that's olive oil, because I believe you have an award-winning olive oil amongst your portfolio of assets.
Well, thank you for bringing that up. This is like free advertisement. I love this. I make the #1 olive oil in the world. It's called Domenica Fiori. It comes in a stainless steel bottle. I make it in Orvieto, Italy, on our estate there. It was a passion of mine about 12 years ago. I started as a hobby, became a business. It's sold all over the world. It wins every award. We enter it everywhere: Japan, Jerusalem, Italy, UK, and it always pretty much wins #1 or #2 in the world. It is an exquisite olive oil. It's very good for you, and I'm very proud of it. It's named after my mother, and it's what I call my nonprofit work, because it doesn't make any money, but. But you know what? It's named after my mother, and it's delicious, so I'll continue to make it.
All right, I'm going to have to try it. Perhaps you can send me a bottle.
I'll do that.
Frank, thank you so much. Really appreciate your insights and your opinions and taking the time to break them down for us. Thank you so much, Frank Giustra. Appreciate it.
Okay, Michelle, thank you for having me on. Thank you.
You want to know how to be a successful investor? The answer is stay with what you know. Don't listen to me. Don't listen to TV people, internet people. Just stay with what you know. If I told you you can only have 20 investments in your life, you would be very careful. You wouldn't be jumping in and out, listening to hot tips every day, every month. You would stay with what you know, and you would become a successful investor. Everybody watching this knows a lot about something, whether it's fashion or cars or sports or something. When you see something that you know is going to be successful and exciting, don't just say, oh, that's going to be great. Don't tell all you. Then you go and you do your research and you figure out how to, and if you should invest and how to invest, and then you invest. You will know it long before I will, or long before other people in the investment community. You will also know when to sell, because you will know when something's going to change again. Nobody likes to hear it. Everybody wants a hot tip. Everybody wants to be rich this month. In those days, we did nothing but focus and concentrate and dig deep and dig deep and dig deep.
Hi there, Greg.